you're dealing with people that when you say your dreams, they don't just say that's a pipe dream, but they say, well, let's go and put the steps in place on how you're going to get there. And that's when these dreams can become a reality.
Hey investors, Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Please hit the subscribe button if you're not already following us. Hit the bell for notifications, whatever it takes to stay up to date on the latest news, tips, and tricks here in the Toronto real estate market. Today, we have a very special guest, Dylan Suitor. I'm so excited that he could join us today. You want to talk about a big fish in a little pond, the little pond being Ontario. This guy is doing quite well, and he's going to be scaling his personal portfolio called Elevate SID to $1 billion in real estate assets in the next 5 years. He's also got a team called Elevation Realty Network, and Elevate Your Wealth is the name of his IGTV show. He's a nice guy. We have a great call, great talk, a little bit of back and forth discussing what does it look like when the big players begin to dominate the market here in Ontario, which is already happening and will continue to happen. Let it be a warning to the little guy. Get your feet moving because the big fish are here to stay. Enjoy the show. Dylan, thanks for joining us on the show. How you doing?
Doing really well. How are you?
I am doing fantastic. Man, we were chatting a couple days ago and I thought, you know what? I got to have Dylan on the show. I almost didn't want to have a full conversation with you because I wanted to have it in front of our audience today.
Let's do it. Let's kind of role play where we were yesterday or a couple days ago, I guess, and kind of carry that forward and ask me whatever you can.
Yeah. Okay. So you're a top realtor and you and I have kind of connected on the side of investing. And so we transitioned I think what's important, what really blew this up was when you started telling me about your portfolio. What are some of the things you've done before? And of course, naturally, there's huge targets ahead of you too. Can you tell us a little bit about what you've done, where you've come from, where you're going, what you're doing today? Despite 2020, everything's in lockdown. You guys are not in lockdown.
No, absolutely not. I mean, we've had some limits, but other than that, we've kind of gone full speed. So yes, I've been on a couple of podcasts in the past. I'm not going to go into the full spiel of where I kind of came from or why I got in this headspace, but the really long and short of it is that my mom is a mortgage agent. She had been for her whole life, basically. I learned about real estate investing from a young age. I bought my first house at 18 years old. I didn't know what I was doing. And as I started to learn more and educate more, being a lifelong learner, I started to understand that, wait a second, this can actually be as big as I possibly want it. And now thinking about how big my world could actually be opened up doors to being in conversations with other big thinkers. And when a couple of big thinkers are in the same room, all of a sudden the world is your oyster. And so I got my real estate license in 2016, mid 2016. My intention was just to represent myself, scale up my real estate portfolio. And I quickly found that after I dealt with a couple of friends and clients that I really enjoyed helping others build massive wealth. And over my first couple of years in real estate, I transitioned from residential sales into almost entirely real estate investors, which is now in 2020, 2021, transitioning from real estate investors looking to buy their first or second property to building a team of real estate investors that can work with people. So we have a number of agents on the team that work with real estate investors as well. And now I've focused most of my energy on really high net worth clients. Like I had one client that added $2 million net worth to his portfolio last year. That was kind of a proud moment of mine. And so I want to work with a select group of individuals personally that we can build large portfolios with, that when I say, hey, we got a 70 unit, are you ready to buy? And they're like, yeah, let's go buy it. And they can put an offer in a couple of days later. You got to put a $10 million unconditional offering within 48 hours. You got to be ready to do that, because when you start getting that kind of estate sale opportunity, you got to jump on it quick because it doesn't last long. And so my vision for the future is to build out kind of three, I guess. There's to build Elevation Realty, which is my team of agents, which is creating generational wealth for them and their families and everyone that they're working with. And that's where a lot of our first-time investors come into, our scaling up investors go to. Then there's also my own real estate investment portfolio where my business partner, Robbie, manages majority of the acquisition. And I'll talk to you a little bit more about those goals in a second. And then there's the piece where I still love working with sellers and I still love working with clients that are looking to buy apartment buildings. And so the conversation that I've been having with people has been changing to those apartment building purchasers that can really hit 6, 7, 8-figure wealth in 12 months. And that part of it is what's really exciting to kind of make that a reality.
Yeah. And so for the audience sake, here's how I got a hold of Dylan. So I asked in a number of the groups that I'm in, who would you recommend to, like, who's someone that can get access to deals and partners and build out in these specific communities? And dude, your name is all over the place. I just call Dylan, man. Just give Dylan a call or read. I'm like, so that was why I reached out to you. And it's like unbelievable. It was a definitely good recommendation. You have to tell us about some of the successes that you've had. Tell us about some of these doors you've built. We can talk a little bit more about the brokerage a little bit later, but I'd like to, where we're headed, just for everyone else, is Dylan and guys like Dylan are able to dominate the market in Ontario. Okay. So you guys are your point shifters. You're changing the game of investing. And this is why I wanted you here so people can actually see, first off, that you can actually do that. And then what would that look like, and how we as investors, whether big, small, can prepare for that in order to get ahead. So tell us about, how are you currently running the ship? What does the ship look like?
So I have one majority partner that I am also his majority partner with Robbie. And so I think I have about 65% of his total holdings, and he's got about 80% of my total holdings. So as opposed to a traditional joint venture partnership where you'll have like an active partner that's the one that does the acquisition and finds the deals and manages the properties, and then passive partner who is a doctor or a lawyer or retired and live in Antigua, whatever that may be, and just funds the projects. What Robbie and I have done is we've taken two active and passive partners, we're putting them together. So we use 100% private money. We do not take on additional partners that we then manage their projects. We do it all for ourselves, and we pay a larger upfront cost because the cost break even for us has been somewhere between 2 and 3 years. So as long as we keep that property for more than 3 years, I know that we're actually further ahead than if we were to bring a partner in, a money partner in, and then basically have 50% of the business or 50% of that property owned by them for the rest of their lives. So we've looked at it on a larger scale. How can we scale and grow a portfolio that gets to $1 billion, not just $1 million or 5 million or 10 million? And so over the last 2 years, we have used our strategy to acquire about $40 million worth of real estate assets that we've now stabilized, and we're buying in a couple of different markets. We really dominate those markets, and we take the bottom 25 to 30% of the market away. And I can talk to you a little bit about how that works for us, but how that also works in each city, and the numbers I'm tracking, which make it possible for us to work, myself and my team, to work with other investors that want to do similar things and want to scale similar portfolios. So we're currently at about 40 million, Robbie and I. I think Robbie's got about 65 million with a couple other partners. He's got 20 or 25. And then I've got another 10 or 12 million with a couple other partners as well, and myself personally owned. And so over the past couple of years, we've really built out the systems on how this is possible and how this is feasible. And the target for going into the new year is, I think our goal for January was 4.7 million in new acquisitions, and February was like 6.8 million. And we've scaled up. The intention is that by the end of 2021, we'll be able to add another 150 million worth of real estate assets in select cities that we've chosen to work in and built teams around.
And folks, this is all in Ontario, and he's talking $1 billion in real estate. And I mean, yes, it's an aggressive target. I mean, what's the point of targets if not aggressive? But you can see the scale, right? And seeing, since you've been licensed, even the growth and being able to build this out, it's been absolutely crazy. And yes, I want to go down the route of dominating the market. But before we do that, I know you're big into naturopath. You're big into mindset and development. Tell us a little bit about how you don't lose your shirt, so to speak.
I love what you're talking about, and I also don't love the word mindset because I feel like,
okay, let's not say mindset.
It's just so repetitive, and it truthfully is. It's the way you think, it's the way you act, it's the way you breathe.
Yeah.
But that's, I mean, mindset, I feel like is an overused word. So I'm like putting some kind of value to it. I'm wearing a ring right now. That's not because I'm married. It's just because it actually tracks how I sleep. It tracks it tracks everything I do. And then I work with a naturopath every 3 to 4 weeks to understand the metrics and the numbers and see if I need to increase vitamins, I need to decrease vitamins, or what vitamins are going to give me the energy so I can keep 16, 18, 20 hours of work if I want to in a day, or I can just decide to just do absolutely nothing, like I'm probably going to do tomorrow. And so going down that, it's all about personal development. It's all about being better than I was yesterday. And I do that through my naturopath. I do that through a fitness coach. I do that through Tony Robbins. I do that through business coaching. I will always work with mentors and always coaches. And I think that is what allows me to elevate where my level of thinking is, because when you're dealing with people that when you say your dreams, they don't just say that's a pipe dream, but they say, well, let's go and put the steps in place on how you're going to get there. That's when these dreams can become a reality. And so work with people that, I mean, they're not going to be cheap because these people are good. And when you pay good people, it doesn't come for free. So when you're working with people that are really good, it elevates your level of thinking exponentially. And when we look at like an accountant, or we look at a lawyer, a lot of times people get upset and they're like, well, that lawyer is $1,000 an hour, that accountant's $700 an hour. And it's like, a good accountant is actually going to save you an exponential amount on what you're going to be paying them. It's going to be a multiple on what you're going to be paying them. So when I look at accountants and lawyers now, I'm like, hey, let's go hire someone that's more expensive, because if I'm going to pay them more, they're probably going to give me a better return on that. Yep. And so it's really changing the way you're thinking about who you're dealing with, who you're working with, and how you're scaling that portfolio. That makes sense.
You're moving your hands. I know this. You're literally just holding a mind in your hand when you.
Yes. Move it all around.
Shape the mind.
Exactly.
Awesome. Okay, so let's talk about how do we get 150 million? I think you said for 2021. How does that look? Because actually, maybe before we go there, one of the things that intrigued me about you is that you have taken time outside of what you're doing to analyze certain markets. So tell us about what's happened in 2020, because we've seen the general trend, but you have actual numbers to show what that looks like.
I do. So as soon as kind of COVID hit, I think I was maybe 3 days behind on when I started tracking these numbers. But I started tracking the active listings through the shift. So I started tracking in Burlington, Hamilton, St. Catharines, and Welland. Living in Burlington, I mean, my office is in Oakville, but living in Burlington, also a lot of our investors work in Hamilton, St. Catharines, Welland, Kitchener-Waterloo, Brantford, so on and so forth. I didn't want to track every single city because I knew that if I could get some sort of trends from a couple cities, that it would probably be fairly consistent, which it is. So in all of Southern Ontario, for the most part, this is the trend that we're seeing across the board. What I was tracking was conditional sales, active listings, and what actually sold that day. And I did track it daily. So starting in March down, I was tracking it daily for a couple of months. And then I went into every couple of weeks. And so what I was able to do is from, say, when COVID first hit, I'm going to use Hamilton, for instance. Hamilton was at 869 active listings, March 27th. March 30th, 867, 924, 940, 923, 873. And then it went down to 817 in October. So as you can see, like we're somewhere between 873 and 940, 90% of this year. I mean, that's what we were at. That's just where we were, which we knew was the seller's market. We knew we were in a lack of inventory type of market. And this, it's not just, I'm not talking just about residential real estate. I'm also talking about multifamily, because it's the exact same world. So we were looking at somewhere between 873 and 940 active listings. Well, in October 11th, we were down to 817 active listings. What's really telling is that December, we went down to 513 active listings, beginning of December. And just a couple of days ago, we were at 352 active.
Oh, throw in the towel. What?
I mean, when you start looking at that, I mean, we're also going to transition this conversation a little bit, because you mentioned like, how do you go and acquire such large volumes? Well, we're buying the entire city. And when I say buying the entire city, I'm not saying like, okay, well, I'm just going to go and just scoop up the entire city. But when you actually look at a city and say, well, we're going to buy 100 houses in this city, if it only sells 1,500 houses a year, you've bought 1/15 of that entire market sales in a year. That determines the growth of that city. It depletes the inventory. When you deplete the inventory, you increase the prices. It's typical supply and demand. That's economics 101. And so that's really what our concept and our philosophy has been around real estate investing, is like, when we look at Canada bringing in 250,000 to 300,000 to 350,000. Now I'm hearing 450,000 in new immigrants to the country. Those people are what is it, 80%, 90% of those are within a half an hour of the border. Well, people are there. They're coming to Toronto. They're coming to Vancouver. And then from the people who live in Toronto are just dispersing. It's just expanding further out. So you know that those new buyers are coming in, and it's also buyers that have money. I mean, people that are immigrating to Canada for the most part are people that have a good job. They have someone they can add value to the country. They're a doctor, they're a dentist, they're a lawyer. They have this asset class that they're able to purchase properties, as opposed to just coming in and consuming the areas. Yeah. So by doing that, we know that when we're going into cities that are about to pop, that are about to jump into growth, if there was for some awful reason, there was a dip in the market or crash in the market at any point in time, because that's always the concept. We've been on a bull market for so long, it can't possibly go on this way. If you look at 450,000 new people moving to the country, where are they going? They're going to be in Toronto. They're going to be in Vancouver. They're going to be in these major cities. They're going to be in these major areas. And then everyone in these major areas is fleeing. So what we've seen with COVID is that we've had a lot of people move from Toronto to the outskirts because they haven't had to live in a condo or a box in the sky. They've wanted to buy their first house. They've wanted to get out of renting and purchase, because interest rates have also gone below 2% for the most part. It's like the other day, it was like 0.99% from HSBC or something. Now, whether I do that or not, I'm not going to look into it, but it was as advertised. The idea is that people can now afford to purchase houses, and they don't need to be living in the downtown core of Toronto to work at TD now, because now TD is working remote. And so it's allowing these secondary markets to continue to increase even through what we see as a pandemic. And then how I perceive what's happening next is that even if we have borders closed, or even if we had an issue where we weren't able to bring in the number of immigrants, now because of that, we're having such a large financial deficit that people are going to have to be, or we're going to have to open the borders at some point in time and probably increase the number of people, because it's the only way to get out of that financial deficit. So all of that amounts to the fact that these cities that have a really low inventory, in my opinion, are probably going to remain with a low inventory. We can't possibly build enough houses for the number of people that are coming into our country.
Yeah. And one of the things that I think spiked this whole conversation, for the sake of the audience as well, was I told you my target is 200 doors next year. And one of the things you said was, well, given a city like Welland, which you said had how many, 40 some odd active listings?
Welland it was hovering between 123 and 137 active listings in March. And then what it did is it decreased. It was actually the first city to decrease, because it was so much lower out of the 4 I was monitoring. Up till May, it maintained that. It was actually October that it decreased to 67 active listings. Then early December was down to 31. And then just a couple of days ago, down to 23. So we're looking at a city that had 137 active listings early March, now has 23 active listings. So it's down to.
So the conversation was, well, you could just buy the whole city, which is terrifying, because I look at myself as a small fish. And that's why I'm like, okay, well, what does this look like? Like this should be concerning, right? It should be concerning when someone can single-handedly shift the market, should they choose to. And so I wanted to talk about, like, how have you, because you've told me you are applying, not, I guess it's a game of Monopoly, but you're employing naturally as a business person, you're looking to scale and you're looking to dominate the markets, which is like, it's totally up to you on what that looks like. How have you used this to your benefit, that not even in a market this tight, maybe in a market less tight even?
So I guess what I'll start off by saying is that there are currently 5 companies, including REITs, that I've been able to determine based on the metrics and the research and the numbers and the different programs that I've purchased, that own more than 10,000 doors. So there's currently 5 in all of Canada that own more than 10,000 doors that I've been able to find. Now, I may be missing something somewhere, but from my perspective, that's 5 companies that own 10,000 or more doors. I mean, if you're looking at adding 200, I want to add 1,000. Actually, my business partner wants to add 1,600 doors next year. It doesn't take us more than 3-4 years to get to that 10,000 doors. And now all of a sudden we're one of 5 or one of 6 companies.
Right.
How many individual investors that are buying 1 or 2 properties, or how many residential buyers that are buying 1 or 2 properties, are being pushed completely out of the market? And so when we look at it by saying, oh, well, prices can't continue to go up because people can't continue to afford it, people aren't going to be able to afford to purchase a home as a residential buyer. We've been talking about that for 20, 30, 40 years, where it's changing the dynamic of what the middle class looks like. It's going to be gone. And so we're going to have those who own a bunch of properties. We're going to have those who rent properties. And that's just simply where the economy is going. That's where the world is going. And so by doing that, you're going to add 200 doors. I'm going to add 1,000 doors. My business partner is going to add 1,600 doors. How many people does that take out of the natural purchasing pool? And you mentioned you want to add 200 doors. Well, you could just go buy all of Welland and you still aren't going to come close to your 200 doors. Well, what does that do for the next person that's selling their residential house in Welland? There's no inventory. They can name their price, because when it used to be 100,
or I could name my price.
And well, exactly, right? And you're going to have to acquire, to buy everything, you're probably going to overpay on some of those properties. But how long are you overpaying for?
Well, I just close them all on the same day. We'll be okay.
Exactly. So, I mean, that's kind of what we're looking at doing. And it's not, our intention is not to go and strap the market. Our intention is not to just buy out everything so there's nothing's available. Our intention is to scale our portfolio to provide affordable housing to cities that otherwise can't do that. And so our main focus has always been to buy the bottom of the market, because builders can't come in and service that area of the market. The cost of build is more than what our purchase and renovation costs are. So if we buy a house, I'm going to use a random number, but if you buy a house for $150,000, which shockingly enough, we did in 2020 in Welland. So this isn't something that hasn't happened in 10 years. We did it in Welland, where you buy a house for $150,000, you put $100,000 into it, and it's a $400,000 or $500,000 home that has now 2 rental units that are $1,400 to $1,700 each. And now we're providing housing for 2 families versus just 1. And what builder can come in for under $250,000 and build a $500,000 house?
Right.
They can't do it.
Yeah, well, you've recognized that there's going to be a need for affordable housing, though the affordability, I think, is sometimes skewed towards home ownership. The main thing is having a roof over their head, which is why you have investors supplying and answering the call for that need. I wonder if you have small investors that would get weeded out by larger investors. There's definitely a pecking order. I mean, I had said to you, I brought up we were talking about a wholesale deal. I'm like, I saw this deal. I'm kind of looking at you. You're like, oh no, I already got that tied up. So the speed it happens, right? And this is where it comes to having a good network, being able to connect in these cities and really kind of plant your flag, I guess, in a sense, have a managing partner there to run it and be quick or pay a premium. I guess that's the other option.
Well, and I think the other thing too is that when you talk about some of these smaller investors getting weeded out by larger investors, I mean, if you're a wholesaler, you aren't licensed as a realtor, you are starting up a business probably because you want quick cash. I mean, wholesaling is about quick cash. If you go and you put out a wholesale and you know that someone's going to buy that wholesale and they're going to pay your $30,000, $40,000, $50,000, $70,000 premium for that property, they're going to close on that deal, and you can do that in 24 hours and you go find the next deal. Why are you sending it out to your list of 50 or 60, 70, 80 people? Why are you holding offers? Why are you showing properties to investors that maybe buy 1 or 2 houses a year? You're going to naturally gravitate if you're a solid business owner looking to scale your business. Your highest and best use of time is to go and get more wholesales. And so why not work with 2, 3, or 4 larger investors that are going to buy all of your inventory versus going and trying to work with 50, 60 individual investors that want to buy 1 of your properties? And so what we've been able to establish is we've been able to establish relationships with wholesalers where people bring us deals prior to sending them out to everywhere else because they know that we're going to sell them. We're going to buy them. If it fits our criteria, which we give very clear expectations of what our criteria is, if it fits that criteria, we're most likely going to buy it. We're going to ask you for 24 or 48 hours for inspection. We're going to have one of our contractors or one of our inspectors out there, and we're going to be able to run the numbers and have it totally analyzed and dealt with within 48 hours. Yep. You don't have a whole lot of residential investors that can say that they can do that because they don't have the team to do that, whereas we do. And so that puts us in a position where we can jump on properties quickly. We can pay wholesalers their wholesaling fee, which they're happy to get, and we will close on properties because we can finance almost everything. So by kind of making that natural storm, for lack of a better term, these wholesalers will call us right away because now they know that we have an end user that's going to close on the property and they're going to get paid.
So if you're a wholesaler, give Dylan a call.
100%.
So, okay. So how does a smaller investor, because by sheer numbers, small investors make up the majority of investors. This is why I think it's important we listen to guys like you, because there's a lot of people that they'll coach you on real estate, but they don't actually have, I guess, a system behind or haven't been able to build and kind of break through that ceiling, which you have. So if you were in their shoes today, how would you break through that ceiling and get to the point? Like, what systems does it take for you to be successful in the way that you are today?
Well, I'm actually going to do something that's probably not podcast etiquette, but I like my whiteboard. And so I'm going to pull this over right now. And I'm just going to show you something really, really simple. Is that if I went to, what I can tell you is that in 2018, when I started serving a lot of investors, they would buy a bungalow on Hamilton Mountain for $400,000. It was like the go-to because you can be a residential buyer. You're like, oh, I'm going to buy my first investment property. What's the safest, easiest? What's going to give me an A+ tenant at the end? And what's a guarantee I'm going to get my money back? They'd buy $400,000 bungalow. They'd have $100,000 tax in reno budget, right? So purchase price is $400,000. Your reno budget's $100,000. This bungalow, once you did the retrofit and refinanced, it was worth $600,000. Well, $600,000 at 80% loan to value is $480,000. Well, you got most of your money back and you did that in a year or 6 months. When you look at this same deal, you're basically adding $200,000 to this now to purchase that same property. You're only adding $175,000 to this in your end value, but you're adding $50,000 to this because the cost of materials has increased. Now you have zero equity or $20,000 or $25,000 in equity appreciation. people are still doing that because they know that they're going to have an A plus tenant. I still support that 100%. You know the renovation you're doing. I would much rather do the duplex conversion personally myself than to buy a converted duplex conversion. Now, I'm not saying that it's all wrong. If you know the people that are doing it, there's still value there. But when you're looking at a little investor that comes in and does their first purchase, it's next to impossible for them to survive unless they start thinking bigger, or they raise more capital. Now we're looking at how can a first-time investor get into the market with buying a building or doing a triplex conversion or a fourplex conversion, or they just need to buy a duplex or a triplex right off the bat and put the capital in because they can't simply buy, renovate, and refinance and use the BRRRR strategy over and over again because there's so many investors looking at that exact same inventory.
Yeah. I wonder if we'll ever get to a point, because like, look at like Toronto, for example, not to say you can't do a BRRRR in Toronto, but it's unlikely. I'm sure there's not a ton of them going on, at least not from what I've seen. I wonder if we'll get to a point in Ontario where even these small markets today will get to a point where it's like, it doesn't make a whole lot of sense to do that. What does the investor do? Do we change the strategy? Do we change the province? Do we change the country? What impact would that have on our market? Because the BRRRR seems to be a pretty consistent, aggressive attack at every level in apartments anyways, in residential.
So that's exactly what I spend. That's my day job, right? So that's what I coach my agents on every day. I mean, I spent yesterday afternoon or yesterday morning, 4 or 5 hours of it, just talking to my team about economy and what are we going to do in 2021 to ensure that we're going to hit our goals and our metrics for ourselves and for our investors. And what I said is you have to have those conversations with investors to reposition them, because I just mentioned to you that the change between October and December. So a 2-month period, we cut all inventory in half. Burlington was 315, and then it was 184. Hamilton was 817, then it was 513. St. Catharines was
now we do have to recognize season
131.
But even still, that's a lot.
You're cutting inventory in half. So if we have to see a massive spike in January for that to happen. So when you start looking at what does an investor do in the future, they either have to be okay with the fact that the BRRRR strategy, you're not going to get all your capital back out. You're not going to be able to recycle it in 3 or 4 or 6 months. It may take you a year or two. But if we continue with the appreciation that we're seeing 4% a month, you're going to be able to refinance it in 18 months later, just simply based on appreciation. Now, I don't like investing on appreciation, but when you look at the economics around it, I don't see it slowing down. And if it does, it's probably a short-term slowdown.
Because my next question was going to be, what's the next thing? Right. And as I've talked to, like, the guy that comes to mind is Quentin D'Souza, for example. Like, you look at things he's done in his past, and his business has been like very much like what's kind of coming next. Like, we've had many guests that are like always kind of ahead. The guys have been here for longer than us, right? They've been here for decades and decades. They've seen this evolution that's taken place. A lot of them were quick to the BRRRR before it was a BRRRR. But I wonder, is that for good, or will the strategy change? And I don't know if you've thought too much. Obviously, there's still a bit of a runway here, but I wonder what comes next for a city like Toronto, a world-class, maybe the best, in my opinion, the best city in the world. Like, what happens then, right?
Well, what are the developers doing in Toronto?
Well, I've talked to smaller guys that are helping to address the missing middle, but a lot of them are just building small condos until there's enough grants or money available for apartments. I've had a lot of people that are kind of seems kind of like anarchy, but they really question the viability of the landlord in general. They say the landlord is the ultimate issue, right? Now, obviously, the landlord is aiming to build a profit, but the thing is if you remove the ability to, this is crazy talk, by the way, but if you remove the ability to be a landlord, now all of a sudden you open up inventory, because like we're kind of talking about, they gobble up so much, and they can be gobbling up more, and they will. So I don't know what that looks like. That's why I'm kind of throwing it out to you to see like what happens next.
So I've said this when I was watching duplexes and the way that a 2-unit property and bungalows and whatnot, I was like, what would it do if you took this same $600,000 bungalow? I'm going to use these numbers, but we use a $600,000 bungalow, and after you've completed this, you could sever this into 2 properties. What if you could sell each of these units for $350,000? It's affordable for an end user,
right?
If it's done based on a code, if they built a code around what you could legally do that with, because you can do that with 2 properties or side by side, sever a lot, build 2 houses.
Yep.
What if we took these duplexes and allowed them to be deeded separately? Allowed you to have 2 hydrometers, 2 whatever HVAC systems you're using, and you had it separate completely. Now you have an upper and lower bungalow or a side-by-side semi that you then sever. I mean, that's what semi-detached houses are. They're houses that are combined and they have two different owners. What if you do that up and down?
Yeah.
So that to me is one huge opportunity that we have to provide more inventory for end users that want to purchase it. The other option, which you are seeing, and you've seen articles as early as this year, is that you'll see 3 or 4 or 5 people will buy a house together. And so 3 or 4 or 5 people will buy these duplexes together, and 2 of them will live upstairs, 2 of them will live downstairs. They'll live in it for 2 years. They'll get that appreciation because they're in the market, and then they'll all go their separate ways and buy their own individual home.
Right. Co-living.
Co-living. Exactly. And co-living was huge in Europe, and then it came over, and now it's happening in Canada.
Yeah.
So
I also see a possibility of changes in tech, right? The ability to, instead of owning a home, own a fraction of the home. Instead of something like a reverse mortgage, you can, I've heard this concept. I can't remember the name of the business. It was online. I don't even know if they've really taken off, but you could sell 49% shares in your property. You still live there, you still pay rent. So there's an investability. You can buy and you can publicly trade in a sense. I mean, you can sell these units off as much as you want in order to invest in real estate kind of in a different way. It's more acting like a REIT at the residential level. So really creative stuff out there, man.
I think that that's the only way that you're going to see these affordability for an end user to be there. Yeah. Otherwise, we just have to be okay with the fact that we're going to move away from a larger portion of individuals in Canada owning a home, and majority now being renters. And that's happening. I mean, if you look at some of the larger cities in Europe, I mean, that's happening where the majority of properties are owned by investors and rented. Go and look in London, you're renting flats everywhere. So maybe that's where we get to. I really don't know. Bigger developers are just building bigger in Toronto. That's how they've made it happen. So what's going to happen in some of these secondary cities and sub-markets is, I mean, you can still knock down, because what we're doing, we're depleting the area where builders can't come in. There's an area where you can be an individual builder. And you're seeing this happen. I mean, some of the Rockstar guys do it too, where they'll buy a smaller home, they'll sever the lot, and they'll build 2 purpose-built duplexes. And now they've got 4 rental units in one house that they bought for $300,000, whatever that may be. And so they're building more housing, and they're building it from scratch, and it increases the value of what that house is worth, because any purpose-built duplex that's brand new is going to be more valuable than the $600,000 duplex that I just retrofitted from a 1950s bungalow.
It's a good conversation on supply and demand. I love some of the thoughts. So now you run a brokerage as well. Tell us a little bit about how you guys have gotten so big. Like you guys are massive. I mean, you told me you just bought up another brokerage in Vaughan or something. Like, you guys are expanding at a tremendous rate. What makes your brokerage unique? Like, how are you pulling this off?
So I actually just purchased my first brokerage. It closes at the end of January. That is Keller Williams neighborhood in Toronto. So I'll be purchasing that. I'll be owning that brokerage, and we're running with that brokerage. We're scaling that brokerage exponentially because of the core values. I mean, people are looking to make money. People are looking to supply for their family. People are looking to give back to their community. And that's what we focus on. We train and we teach. We're a training and technology company, that just so happens to be in real estate. And Gary Keller has got this big vision around what that looks like. And I've just been able to get on board and be a small part in that big C. And so I've made my own real estate team, which is another concept created years ago by Keller Williams, was this like idea of a team within a brokerage. I'm not a broker, so I don't have to be a sub brokerage. I can run a team under the Keller Williams brand and umbrella, which was Elevation Realty Network under Keller Williams. And now I have 8 full-time agents as well as 6 administrators, and we're running a large real estate business within a brokerage. The idea, the concept is, how can you scale that business? And it's really built on the book, The Millionaire Real Estate Agent. So all I've done is studied that book and every training piece around that book, so that when people come into my world, when big thinkers come into my world, they get to focus on what they want to do. They don't have to worry about all the little minutia. They can focus on, you want to go and get into apartment buildings? Let's work together, and I'm going to have you work just on apartment building sales, and I'm going to teach you how to find more apartment buildings off market. I'm going to either give you some of the apartment building buyer clients that I have at a different split, or I'm going to teach you how to market and farm for those clients. You tell me what you want to do, and we'll get you very, very hyper focused on that, and then we'll flow business to you so you can grow your business. And by being a part of that, their business grows, my business grows, the brokerage grows, and now our entire community grows. So it's, how can 1 + 1 = 10. I mean, it's the same reason and concept why I work with Robbie, scaling our portfolio, and how we're able to scale it much faster than if we were to get a bunch of cash partner JVs, is because we look at, how can 1 + 1 = 10? how can we build out the systems and metrics so that it's duplicatable and we have the same system for any amount of properties. It's the exact same thing with my real estate business and with my real estate brokerage. And so with the brokerage, my big thing is your first hire as a solo real estate agent should be an administrator. If you go and hire an agent, you are now taking a problem that you aren't there to solve. Most realtors are not administrators. Most realtors are very high D personality, A-type, they're sales oriented, they just sell. Most of the time when you look at a realtor, their paperwork is probably going to be missing something most of the time. So you need to find that person that fills that gap. And when you're able to do that, it may be a step backwards when you're initially looking at bringing it on, going, I'm at full capacity. How am I possibly supposed to bring on an administrator? Well, that's exactly why you should bring on an administrator. And then you take from that administrator and you get someone who just books showings or just goes on showings for you as a showing assistant, or you have someone who just contacts your database or just calls other clients to generate those leads. And now you have this large real estate business with a lot less people.
And if I was allowed to use the word mindset, I say you got quite a good mindset over there.
You're allowed to use it. I just like to make sure I preface it by saying it's overused, and I want to make sure you get.
There's a couple of things I got out of that. One is for people who are looking for a brokerage like that. If you want to invest, it's a different kind of brokerage than to just buy and sell real estate. The other side would be for consumers, people that are out there, they want to invest. They're looking for realtors who are capable of investing, recognize the difference, right? Recognize there is a very real difference between the two and what an agent is capable of doing. It's been quite a journey for me to recognize I've been an investor realtor, but on paper longer than I've actually been an investor realtor. And it's a big difference. Dylan, this has been a fantastic conversation, just as I had hoped. And maybe you could tell us a little bit more about where people can find out more about you, some of the programs you got going on right now.
I appreciate that. I've actually enjoyed this conversation. It's different than most podcasts I'm on, which I love too. I like to make sure we're having different conversations. And in summary, one thing I will finish with regarding the Keller Williams concept is I'm going to tie it back to investors. Every investor's read Rich Dad Poor Dad. Every investor knows what Robert Kiyosaki is. They all know what this is. They all know the cash flow quadrant. And they know that the left side is where 95% of the population, only 5% of the wealth is. The right side is 5% of the population and 95% of the wealth. What we've done at Keller Williams is we've taken it from the bottom left corner of self-employed, and we've gone to the top right corner of business owner. And by getting to the right side, then you develop that investor mindset. So that's really what we work with our agents on and with the agents on our team, as well as in the brokerage. Easiest way to kind of follow me would be at Dylan Suitor Elevate on Instagram. As of yesterday, actually, I'm not sure when this is going live, but as of yesterday, we just launched season 2 of Elevate Your Wealth with Dylan Suitor. So I'll be offering like 30-minute sessions where I'll have a one-on-one conversation similar to what we're having right now with investors that are looking to scale their portfolio, or with realtors that are looking to go from self-employed to business owner. Whether that be that they want to partner up and work on a team, or if they want to just build a team out themselves. Those are the individuals that I want to spend my time with. And so I've created this little Instagram TV series called Elevate Your Wealth with Dylan Suitor. And we're going to season 2, which airs January 6th. So by the time this comes out, you guys will probably already.
It will. Yes. This is going to be coming out late in January. We're recording this on New Year's Eve day.
Yes. That's also why I'm in my special attire of New Year's Eve day.
Celebrate. Socially distancing, celebrate.
Exactly. And so, yes, you can also email me at info@elevationrealty.ca if you want to reach out to me. That goes directly to my executive assistant, who manages kind of the flow of conversations, and we can get booked in. And if you're looking to kind of go from an investor buying 1 or 2 single family duplexes, whatever that may look like, to an investor looking at scaling your portfolio very large, or if you're looking to add 5 or 6 more buildings in the coming year, or you want to be a real estate agent that takes your business to the next level, that's really what the Elevate Your Wealth seasons are going to all be about, is how can we take your business and customize and tailor your package for the next year to make sure we get you to your goals faster.
I think people be crazy listening to this podcast going into the new year and not have massive targets coming out of this. So this has been a fantastic conversation, and I've learned a bunch as well. So Dylan, thank you for taking time. Everybody who is following this, if you could, please like this video, leave us a comment if you want to say anything, and give a shout out to Dylan. You can tag us as well on Instagram. And yeah, it's been fun, man. Appreciate your time.
I appreciate you having me on. I'm looking forward to adding some more value to real estate investors.